right, we're in this weekly back test here for the week of, I believe it's the second week of September, leaving Labor Day, getting us some better price action. One of the advantages is all you futures traders, including myself, I'm a futures trader. I trade YM and I trade CFDs as well, very heavily funded in CFDs. I don't know why more future traders don't go into CFD and don't trade YM more. I can show this over and over and over again how it's just way cleaner than an NASDAQ. Now, I don't know why ICT Michael himself doesn't like it. He showed a couple charts one time, it was choppy, but I backtest both and have been for years now, and YM is super clean. So once again, we're going to prove that the unicorn model entry, I'm going to show you guys today an easy way to backtest, a quick way to backtest. And you go to the 15-minute, you open up this indicator. It's just so you can see it in these colorful blocks. So it's called ICT Kill Zones and Pivots. It includes all the sessions, but doesn't include your kill zone, which isn't really that important, really. So what I've done here is I've marked in the Monday. And what I've done is you can see I put these circles on the top of the liquidity sweep. Anyways, moving on, just to show the point, these circles moving through this is where there's a valid liquidity sweep. And what I mean by valid is my rule is within 60, 65 points, 70 a roll of dice is legit. Okay, anything more than that, it's not a sweep. YM does like to come a little bit deeper to grab the stops. Okay, we're going to drop down to the 1 minute. You're going to see these liquidity sweeps, right? There's one here, but look, it's too deep. It's running up 179 points. That's not a sweep. So moving on down to the 1 minute, just wanted you guys to see that what those circles were. They're sweeps of liquidity. We are on the 1 minute here. One thing I'm not accounting for is the bias. And I'm going to do a whole other video on the bias. And I'm going to print out a template sheet, a template for everybody. Basically what my bias does is I'll still get into a trade with a liquidity sweep with a weak bias, but basically with a weak bias, I'm just going to use half the leverage. Okay, so moving into the first AM macro here, we've come up and we've swept right here, the AM high, which is here, and also back here, these are actually London highs right here. So on Monday morning, at this point right in here, I was looking to get into this trade. And as you can see, this is a sweep of London, right? So we have a session liquidity clear. We have this displacement right off the hop, displacing over the mitigation, and it just doesn't come back for an entry in any of these fair value gaps until it's too late, right? I'm not going to get in down here on this fair value gap. There's no breaker paired with it. So moving on, there was no trade in the first AM macro. Here, start macro here, you can see price has come up right in here and it swept the AM session in here. It happened outside of the macro, but then in the macro, it swept this M high here. Also, the sweep of liquidity over here of the London highs are still valid. We've only run a 35 point past the liquidity, probably triggering the buy stops that are heading in the buy direction. Now this one right here, you can see that right off the hop, it's displaced over this mitigation block here, but it doesn't do it until here. And it's not quite paired with mitigation block, but the upper one is, and it already tags into it here, making this fair value gap sort of a continuation model run because it's not paired with this is not paired with a mitigation block or a breaker right over here, but this upper one was. It just was really hard to catch all in one candle, and it didn't quite displace until here. If you got in here, you're fast and quick, and that's a really good entry up here if you got that. But the candle didn't close till here, so it would have been a little bit tricky. The entry is right in the fair value gap here. I put a red arrow. So the first low that gives you a 1 to 3, we ran a 17-point stop on that. So 1 to 3 is down here, 62 points roughly. Here's the low right here, the first low. That gives you a 1 to 3. We're in 1 to 3 season for Y. Recorded it Monday up here, 62 points. Moving forward into, actually I'll show one more trade. Even though after you've completed a trade for the day, you do not keep trading, but but if you had some evals, you maybe wanted to get past, here's another one right here. So we've come down and we've sweep the AM lows and London down here, right on this circle right here. London being way the hell back there. So after we sweep the AM lows, which is right here, also right over here, in the lunch macro, you have this displacement up immediately over top of this mitigation block in here. Then we have a huge push up. Okay, here's a breaker up here, but if you're aggressive and want to get in, here was your mitigation block entry here. Price returns into the fair value gap that displaces over the mitigation block here. However, in all honesty, I probably would have grabbed it up here into this fair value gap above it. Stop placement here, 30-point stop just below the candle of the fair value gap, below the mitigation block itself. 30, 31 points would have been sufficient. Definitely get your 1 to 3 here. It won't let me move it up. But anyways, 75 points, 76 points to here. So anyways, I didn't take this trade. I took the trade in the second AM macro. So as you can see, we're going to move into Tuesday now. Moving into Tuesday, Monday, we secured 62 points, 62 handles. On the day, we have a circle drawn in. So there's been a sweep of liquidity of some sort. I believe this was the London highs. It was. However, it happened up here at 6:30. Now, one thing I want you to pay attention to this is it happens sort of like at the open, sort of pre-open here. And it swept a major session liquidity right here in the premium zone already. So what does that tell you? Is that it's finished its job in the premium and now it needs to return to a discount zone before smart money wants to re-enter into the trade. So you can see it comes down here and it takes out the New York pre-open kill zone right here. Okay, now it puts out a fake move here, displacing over this mitigation block here. However, it just collapses and keeps going because it's finished its job into the premium. It needs to return to a discount. Now, if you look at this leg to that gap, this is 50%. It's considered liquidity. It's considered it tapping the discount zone. So we're finished with the premium and we're back in the discount. And I realized it could come deeper. So I'm not trying to hold this trade overnight or for 3-4 days. You have your sweep of liquidity here, 50% mark. You have this displacement up. It finishes over the breaker. This is the breaker in the blue box here. So it taps back to the 50% mark of this breaker right here, which is also this fair value gap right inside here. And this is your entry right on the red and green line right here. Stop placement sitting right at 26 points, just below the body of this order block, protecting the lower fair value gap. In case price wants to wick into the order block here, we're protected down here at 26 points. We are looking for a 1 to 3, so that would be 75 points. The first high that gives you a 1 to 3 would be these two equal highs right here. So 75 points, market goes up a little bit higher, and that's it for the run. So you get your 75 points on Tuesday. Collecting equal highs like this is going to be key for you guys. Now we're going to head into Wednesday. All right, here we are at Wednesday. Okay, so we wanted to run 180 points past London here. This is not a sweep of liquidity. However, it is the AM high of the day. Price tries to come down into here. The price comes down into here. Then we come back up, and in this second AM macro right here between the green and the red, we have a sweep of the AM high in the second AM macro, which makes it valid, except it does not put a trade out in this macro. Watch as you see it comes down. It never displaces over this breaker. All it's doing is coming into this fair value gap. Also here, tapping the order block, comes up. Here's between the macros. So in the third AM macro, it sweeps these AM highs right here. So we have a sweep. We have a temporary high here. Low that made that temporary high is this candle here. We have it come down and displace over it slightly. And that's exactly where our entry is. And even give you more confirmation before it came back, it closed over the breaker here. We have a break of the breaker block, and we have this displacement here and here over this mitigation block. Entry being right here, it just dips in right here. Stop loss way above up here, above this order block right here. You could have tightened up the stop a little bit, but it's a little bit risky because price has not returned into this fair value gap, which is paired with this mitigation block here. So the risk of it coming up and just wicking high into this order block here, this is mitigation block. So you're looking at just putting it slightly above, so 27, 28 points. We are looking for the first low that will give us a 1 to 3, and that is this low down in here, right here, for a total of 86 points or 87 points I scored it at. We're going to head into Thursday. So Thursday is right here, and this is the first AM macro. So what we've done here is I've made up a green line here, and that green line here is actually the sweep of Asia mid-range. Okay, which happened up here technically. So even down here, I thought that was a little bit too far of a sweep, 56 points. I just didn't find it was a solid sweep, but I was ready to go in because it was a sweep technically. And I was ready to go in on half leverage. Okay, so a B plus setup, but it didn't let me in. And I was actually live on YouTube on this one and couldn't get in because you have all of this displacement up with no proper stop loss placement in any of these fair value gaps. I'm not about to do a 100-point stop in here, right? 96. So basically, then I saw that this candle here had filled all the fair value gaps that are bullish. So I was no longer interested in this trade. Once it does that, to me, it's non-algorithmic, and I thought it was just bullshit. I was live on YouTube, not paying attention, and it swept London. So I should have taken that trade, and we could have some more points. See, I got Thursday at 0, where I could have at least 100 points or 90 points in there, because that's what Nas did. But I'll mark it 0 for now, because we're only backtesting YM US30 at the moment, and you can see we just have 0 sweeps of liquidity. We have this sweep of this. That's not enough because that's not the AM low. Market 0, dude. And we're going to move on. As you can see, there's no trades. We're going to move on to Friday now. All right, here we are, Friday. We have some sort of sweep up here, probably, but you can see the time. We're not in the first AM macro. We are before the open, US Open, New York Stock Exchange Open, right here. This is the third AM macro right in here, which is the beginning of lunch. So we have a valid sweep of the AM session right over here. So then what we have here is a sweep of AM. We fill this fair value gap right here. Here is the breaker block. The price closes over the breaker block here and then returns back into it, which is I marked it as a potential entry. However, you are not in a macro here, and it's way too far away. This is confluence, okay? So it fills it, taps it, breaks the block here, taps back into it here. So you're watching this and you're like, oh yeah, well, I really hope it gives me displacement. And here in the macro, it actually gives you an opportunity. So we have the temporary low being right here. This is the temporary high. So this is the mitigation block. It displaces over it, comes up, and right in macro, what does it do? And then on the minute, comes right back in. I understand it comes right back in here as well. It's a minute before. I would take it here. I would take it there. I would take it everywhere. So technically, you're taking it up here. Valid stop placement. Now let's talk about that. How come the stop itself isn't below the fair value gap? Because when it's a mitigation block like this, what you'll want to do is on a short mitigation run like this, it's going to wick deep into the mitigation block. So you just put your stop loss below the low of the mitigation block, not the candle once the mitigation block. If you can, always put your stop below the low. It's going to be your best stop placement. In this case, it's 30 points. So now we're looking for the first high that will give us a 1 to 3, which would be between 80 and 90 points. Well, here's the first high that gives you 84 points. That's why I was close enough to 90. And that is a wrap. That is Friday. So adding up the score here, you have Monday 62 points, you have Tuesday 75 points, you have Wednesday 87 points, and you have Friday 80 points, giving you a total of 304 points on the week, which is fantastic compared to the NASDAQ. Now, I understand that this is just a back test, and I understand I'm not reflecting this as exactly what I got as a trader. I am just showcasing the model exactly by the rules and showing you guys how week after week after week, this model pays out. It will pass your prop firms and it will make you very wealthy. You just have to stick to the model, and you yourself have to back test this every week, proving to yourself that the model works, so you can trust in the model and execute a trade without even thinking about it. So that's going to be enough for today's back test. Any questions, put it in the comment section and we'll go over it together. Have a great weekend, guys.